Welcome to the BF Anderson Technical Report for December 27th. You know, the comparisons between the 1979-1982 bull market to today are too similar to ignore. Recently, a report and an interview on Bloomberg basically said the economic changes under the Donald Trump administration may be more significant than shifts from the socialists to the capitalists in the UK, US, and Germany from 1979 to 1982. Comparing Trump to Margaret Thatcher, Ronald Reagan, and Helmut Kohl, the incoming administration may have a much bigger impact on the US economy than can be measured by tax changes and fiscal spending. The Trump era could ignite animal spirits and attract productive capital. In other words, this change is too big to put a pencil to. In other words, you probably can't figure it out. And if you go back and look at the 1983 breakout, the graph unfortunately doesn't go back to the 1968. It just doesn't go back that far. But the market actually peaked in 1966. It started rising right after World War II, around 1942, and rallied all the way up until 1966. Then the market basically did nothing but move sideways from 1966 till it broke out in 1983. So it was 16 years of consolidation before you got the breakout. Now the breakout came. Now, one thing I have learned over the years, now I was in the business during this time period, and I can remember clearly, you couldn't give a stock away. No one wanted to invest in stocks. So if I would have come to you in 1982 and say, well, you know, the market's getting ready to rally significantly and it's going to go up for 20 years or how many years it went up, but you wouldn't have believed me, is the point. So difficult stock markets are usually followed by easier stock markets. Now, I'm not saying easy. I'm just saying easier. Okay, now, this is the consolidation box that we have had now that's been going on for about 13 years. Now, if you were, like I said, if you were told that stocks would go up dramatically in 82, we're getting the same type of breakout. Now, what's also interesting about this graph is that you notice that we tend to get the breakout right at the end of 1982, right in the November-December period here is where we get the breakout. And you kind of see that repeat itself in several consolidations. Like here's a consolidation, breakout around right at the first of the year. And my theory on this is that, and the reason for it is that analysts tend to revise their earnings estimates around the December-January time frame. And if the earnings estimates are going up, well, the market tends to rally. So as you can also see here, we've had a major sideways movement here of about 3 years, and we're just now starting to break out again in that November-December time frame. Now, recently, and just over the holidays here, a very prominent economist named Ed Yardeni. He heads up a company called Yardeni Research. Ed is a noted economist. He's well liked and well respected. Now, he is saying that he believes that interest rates are on their way up and that we're going to see about a 3% 10-year Treasury note. Now, if you notice here, that would just be really at the top of the box, top of the trading range. So it's not a stretch. I think it's a very a possible thing. Now, Yardeni, the most important thing that Yardeni has come up with here over the holidays was that he has raised his S&P earnings estimates to 20%. In other words, the S&P earnings for 2017 he is estimating will be 20% higher than 16. His prior estimate was 8%. That is a dramatic change. So we're looking here at the Dow Jones Transportation Index. Again, back to 1983. We got what we call a Dow theory buy signal, which basically is when the industrials, which in the prior graph we looked at the industrials, when the industrials break out and then you get a confirmation of a transportation index breakout, that's a bull market. That's a bull market. So as you can see here now, we've basically got a consolidation box going in the transports. A breakout on the transports of around 9250, 9300 would really confirm the breakout that we're seeing here in the Dow Industrials. So have a happy holidays, and if you have any questions, please give me a call.